All right. Just starting with the S&P 500. As a lot of you may remember, I use the Ichimoku charts and I use the Kijun-sen on the monthly charts as my guide for the primary bull or primary bear trend. On this chart, that's the pink line there. So what I want to see is bullish activity up above that line for me to be in a primary bull, and we certainly do have that at the right-hand side of the chart. So everyone can see that? Yes? Hello? Yep, good. Okay. So we've bounced off retracement back towards that pink line, probably about 3 or 4 months ago, towards the end of last year. At this time last year, we were just below the Kijun-sen, and we were looking at that line holding as resistance and just wondering whether we were going to break out to the upside. So we did break out to the upside with a very strong white body candle, some decent follow through, retracement back towards the line and bouncing off with some white body candles. We are seeing the size of those white bodies now start to shrink up a little bit. So net progress is being slowed. So we're starting to lose a little bit of momentum here. But we could see from that, if we do see a lower high and lower low, could see a retracement back towards the Tenkan-sen, which is the green line, which is around 4,500 or so. And if the market moves back through there in the retracement, looking for support at the Kijun-sen, the pink line, which is about 4,200 or so. And just that indicator on the bottom there, that's the RSI. Just using some of Andrew Cardwell's idea about a neutral zone in the middle there, and then sustained activity up above there for the market trading in a bullish manner. So we have seen over the last 3 or 4 months the RSI being maintained up above that level. So it is suggesting that we are in a primary bull at the moment. Also with the Bollinger Bands that I like to use, a bit different than the way Bollinger uses them. I use a 1 standard deviation. I look for bullish or bearish activity up above or down below the upper or lower bands. And 3 months ago, we saw a bullish breakout up above that band with strong follow through, and it is suggesting that we are in a fairly strong market. Any pullback, we tend to see initial support around the top of those bands. If we look back here, when we've got a strong trending market, the top of the bands does act as support. So looking to about 4,600, where the top of that orange line is, as an area of support. Down the bottom, indicator Bollinger Band width. We have seen that moving down. It has been at a low level when the market was retracing from that sell-off, and it is suggesting that with the bands just squeezing up a little bit, we could see this trend develop further to the upside. And with a Fibonacci extension tool here, ignoring that last candle, which is the current month that hasn't finished yet, but the month prior, we are seeing the market interact with the 100%, or have seen the market interact with that 100% level with a little spinning top type candle perhaps. As I mentioned, the bodies of those white candles have been shrinking, so probably losing a little bit of momentum. It will be interesting if we see continued bullish activity up above here. The market could move up to the 161.8% level, which is 53.90. And similar with the Fibonacci retracement tool, we've moved through the 100% level and finding resistance around that 161.8% level. And any move up above here in a bullish manner, we're looking at the 261.8% level, just above that 5,400 area. I also like to use these yearly pivot points on the monthly charts. And we were back here early 2023 last year, looking at the market potentially moving up to that R1 level. It did find that area and then came off from there. So looking at the R1 in the current pivot point levels here as a potential target for this market, we're very close to it. So for the next month that is developing, if we do see continued bullish activity up there, just looking for how the market reacts to that level. If it backs off from there, we could see the market come off to find support around that blue line, which is the middle pivot point level. If it breaks out through there in a bullish manner, we could see the market moving to the R2 level, which is up around that 5,500 area. The COPOC, we had a look at the COPOC with my charts last year, and the COPOC does work pretty well. I've put on the 3 last signals, and the way you use the COPOC, it's always on a long-term chart, on a monthly chart, used with the Dow, only used with the Dow, and it's simply a signal to start accumulating stocks. It's not a signal to buy the index, but a signal to start accumulating stocks. So that signal was given at the end of 2022, and we would have been looking at that signal last year when we did this talk. And for quite a bit of this year, we've seen the Dow maintaining activity up above the Kijun-sen, but moving sideways, and then in the last few months just taking off. So that has been quite a good signal once again. And just comparing the US asset classes and looking at risk or return versus risk. And the performer here for the last year, I'm using a daily 255 days to approximate a year, and 20% roughly return on the S&P 500. Gold in the US, only a 4% return. But if we look at reward to risk, the performer has been by a factor of 3 times roughly the equities market versus gold. The bonds, the gross underperformer here. So if you were trading in the equities market here versus any of the other asset classes, you'd be quite happy in the US. Looking at gold futures for Ken, strong resistance around the 2100 level. The market trading up above the Kijun-sen, so looking at a primary bull. We did have an excursion down below there at the end of 2022, but a solid breakout. But we're still trying hard to close up above that 2100 level, and that will be crucial. If we close above there in a solid bullish way, we could see further development to the upside here. Interestingly, a retracement about 4 or 5 months ago back towards the Kijun-sen and the market bouncing off. So there is a potential if the market can move up through that area. And with the bands, where we saw the market trading down below the band and up above the band, and the bands going sideways and squeezing, it did set the market up for a breakout. We haven't had a strong breakout with any strong follow through yet. We're seeing these large shadows on these candles as they get up to towards that 2100 area, but the activity is up within above the upper band or within the upper half of the band, so that's bullish. We don't want to see this sort of activity down below the band or within the lower half of the band. So that's a good bullish sign for gold, and just looking for that breakout and a bullish close above 2100. Just looking at some patterns in gold. Patterns in gold tend to work pretty well. A little bit ambitious with this megaphone type pattern, or what do they call it again?
Fanning triangle.
Yeah, or a megaphone, whatever. Or what do they call it? A broadening top. Broadening top. Yeah,
reverse point wave. I like to call it a expander.
Yeah. The only thing is though that there are two of those peaks don't sort of touch the line there, and one of them was a little bit lower, so it's not quite a proper broadening top if you look at some of these peaks in between. Importantly though, the trough here over the last 6 months or so ago was very much higher than that one that made that lower trough within the pattern. So it is suggesting that there could be a breakout to the upside, but
Larry,
we need a strong close up above that upper barrier.
Glenn Neely is saying that he's seeing this as a pattern he's never seen before.
Yep.
And so it's probable, it's probable by the way that the expander is that it's violating his Elliott and Neo wave rules, which I
Right.
found interesting when you're saying it's like a bit of a stretch, which it is really,
Yeah.
but
Yeah.
it's a weird
Well, I
pattern.
could have drawn that top line angle just slightly lower, but we still haven't. We want to see it close up above that upper barrier if it is going to move higher. But interestingly, if you look at it in another way, it looks like not an inverse head and shoulders, but it's what do they call this pattern? The it's like an upside down head and shoulders.
Is it
So,
a higher cup with hand? No.
no, it's not an inverse. Obviously, is when the market's trending down,
Yeah.
but you get these
Right.
head and shoulders patterns where the head and shoulders are turned upside down
Yeah.
after a strong trending up move. And here we have the uptrend. Here we have the left shoulder, the head, and the right shoulder. So if we do see a strong close up above that upper barrier, and I've been, that upper barrier could be shifted around quite a bit, but a strong bullish close up above these could see gold take off, I think. Or I'll be watching that Kijun-sen to act as a indicator as to whether all of these ideas about moving to the upside and the breakouts, whether that's over or not. If we see bearish activity below there, we could see gold just continue to move sideways or whatever. With the pivot points, those yearly pivot points, and for the past year, that first resistance level, as we saw with the index for the S&P, it has been a good target for gold, and then the market came off that level and found support around the first pivot point level. In this current candle, some support coming in, or the previous candle, the one that has finished trading with that long shadow on the bottom, the second last one on the chart here, support coming in around that middle pivot point level, which is the blue line. But if the market does bounce off there, just looking to a target of that first resistance level up above the 2200 level, and possibly higher if we see a strong bullish close up above that resistance that we looked at previously. With the bonds, still obviously trending down. Market was looking very overextended. These are the 7 to 10 year Treasury bond ETFs, and looking very overextended down at these lows. But perhaps a little bit of a change in this market where for the whole of the last couple of years, we haven't seen any bullish activity up above the green line there, the Tenkan-sen. And importantly, about 2 months ago, we saw a strong bullish candle close up above there. So it is suggesting that perhaps there is potential for a change of sentiment in this market. If we do see any upside, I think the Kijun-sen, the pink line there, is probably going to be an area where there will be some resistance coming in, but certainly looking very strongly oversold a couple of months ago, and potential for this market to not continue the strong downtrend that we've seen recently. Looking at the RSI as well, down below that neutral zone, we have a divergence. Shit, couldn't think. A bullish divergence there, where we've got a lower low from the chart and a higher low from the RSI. So it is suggesting that even though the chart is making the lows there, the same momentum isn't behind it, and that's certainly borne out by this close up above the green line there, the Tenkan-sen. So we could see a bit of a change in the bonds there, and also this is shown in the bands here too, where it's been the first strong bullish close that we've had within the bands for the last few years, and importantly, it's the first time since about late 2021 where we've seen the market close within around the middle of the bands. Most of the activity has been down below that one standard deviation band and just within the bottom half of the band. And that is also suggesting that there could be a change of sentiment here. What would normally happen is that we'll see sideways movement here, and then some support coming in down around that lower band, and then perhaps a bounce off and some activity sideways, and then perhaps a breakout to the upside eventually. But that could take quite a while before that happens. Over to the ASX 200, pretty shitty market, to be honest. Couple of excursions down below the Kijun-sen there. But what I want to see with these breakouts down below the Kijun-sen is the breakout down below, a retracement, and then the strong follow through. And we haven't seen that the last few times that's occurred with the ASX 200. We did see over the last, or 2 months ago, a strong white body candle, the market getting up to that resistance about 7,700 roughly, I think it is, or something like that. I think that's the level. And we are just poking up above that area. But the last candle that closed above there certainly wasn't a very positive candle. It was a very small body with a long shadow and is a potential reversal signal. But if we do see a strong bullish close up above here, we could see further development to the upside. Importantly, though, trading above that Kijun-sen, so there is hope for upside here. With the bands, squeeze going on, looking for a potential breakout. Did have the breakout to the upside with that bullish candle, but no strong bullish follow through. So what I want to see is another strong bullish white body candle to the upside and getting through that overhead resistance. With the COPOC on the ASX 200, had a look at these before, and the COPOC with the ASX 200 has given some pretty good signals in the past too. The latest one was in early 2023, and it is suggesting at the moment to start accumulating stocks. So it adds a bit of weight to a potential breakout up above that resistance. So it's just start quietly accumulating stocks here for a potential up move. And if we look at the previous COPOC signals, which is when the COPOC is below the 0 level and it turns up, that's what the signal is. So they've been pretty good signals in the past, and this one could prove to be a good one as well. And just looking at some of the asset classes in the Aussie markets here, and gold, Ken will be happy. Gold has been the best performer here. 14% return, reward to risk ratio of about 3 times, and nothing else has really come near it. The equities market.
Gold in Australian dollars, Larry, is returning about 8% a year for the last 15 years, with about 3 down years. It's
Yep. This is in Aussie dollar terms, Ken. This is in Aussie dollar terms.
Mm-hmm.
This is the PM Gold ETF, which is, I think it's an Aussie dollar denomination. So yeah, it's looked pretty good over the last year or so. The ASX 200, if we look at the reward to return, the risk, or risk to return, the risk has certainly been greater than the reward over the last year. So gold was the right one, and Ken was probably on that. And here's just a quick look at that ETF. It's STW, which is the code for the ETF, the ASX 200. It basically pretty much mirrors the index, which it should. But if we look at the RSI down the bottom here, just moving within that neutral zone for the past probably 12 months to 18 months or so, and just seeing a little bit of a poke up above the upper level there. So it is suggesting there's potential for this to move further to the upside, but not seeing in the current candle. Bullish activity, but that very small body candle with the shadow, which is a bit of a potential hanging man, I think it is. And the gold ETF certainly looks very much different. Very big triangle breakout. And then this market has been that strong that it, in the last 12 to 18 months or so, it hasn't retraced towards the Kijun-sen. We've seen support coming in at the Tenkan-sen, and that's what you tend to see in these markets that have a lot of upside momentum. That Tenkan-sen tends to be the place, that green line there, the place where we find that first support coming in, and it does tend to hold in the strong market. So that will be a good area to watch, that green line, the Tenkan-sen. But still, even if it does come back, looking for support around the Kijun-sen, the pink line there. And just looking quickly at the RSI, sustained activity up above the neutral zone there. And it is suggesting, in terms of Cardwell's work, that this is a super bull market in gold in Aussie dollar terms. So that's it for me.
You notice, Larry, that gold might be going very well, but the Australian gold stocks are pretty abysmal when you
Really?
you look at my portfolio.
Well, firstly, does anyone have questions for Larry?
No, thank you. That was very good general coverage to start the year.
Thank you.
Okay, so a couple of things. I'll just do a quick thing on Bitcoin. Now, traditionally, Bitcoin, when it halves in value, there's a tendency to be a bit of a panic just before it halves the amount of Bitcoin that it's being able to be made every time there's a block sent out. And I think it goes down to 3.25 Bitcoin should be approximately around March 20th to March 26th, that kind of area. Often there's a bit of a pullback before that. What we've seen is the funds coming in, but one of the biggest funds that was like a trust called MicroStrategy Trust has come in and sold an equal amount of what the big funds, big ETFs have been buying. I think about 78,000 Bitcoin Michael Saylor's MicroStrategy had. So there was a meeting of buyers and sellers. Was lucky enough to work out that when the SEC was going to actually finally approve ETFs for public consumption and in the purchase of Bitcoin, that should be the top. A bit like what happened with the futures contract when it was created. I think that was back in 2017 or 2020. Don't quote me. It might be 2020 when it peaked. When it started, Bitcoin peaked, and then it just fell away from that 2017. Sorry, it was the 20,000 level. That's when it peaked. So a little bit of the disclaimer and warning, which I need to do just for licensing purposes. And don't fight the central banks. And I think I talked about this last time. Bitcoin worked great during falling interest rates. And as you'll see later on, falling interest rates started really September, October last year with the bond forecast that I made last year. So at the moment, we're getting a bit of a dip in Bitcoin. I got to sell up above 70,000 Aussie dollars. And I'm really just looking for a pullback down to about the 36,250 area, around that 35,000 area, for it to go down into, have a bit of a panic. Maybe it could go 28,800 before the halvening in March, late March. Maybe it's early April. It's an estimate of when there's got to be a certain number of blocks made and mined before it will go off. So seasonally, it's usually a bit weak, but usually it'll rally up into April. So after the halvening, there should be a decrease in the increase of supply. It's a lessening in supply increase. And so that's when I think you'll see Bitcoin pop up again, then fail and do its normal seasonal cycles in the year. So don't want to rip on too much on Bitcoin. Here's the disclaimer and warning for the Forex work. This is what happened last year in 2023. This is my forecast pattern. And you can see that the US dollar index itself was just choppy and sloppy most of the year and accorded kind of to the jiggles and wiggles of the forecast, just being in the range. So just quickly, we'll get to the dollar index forecast. In a normal year, it's kind of for a bit of a rally, and we've seen a stronger rally into this now. into early February, into early January, and it continued on. And at the moment, we're looking for it maybe to peter out. So a little bit of a harder forecast to run. It's not exactly going to plan, but maybe probably in the next couple of weeks, we'll see it drop away because interest rates. So highs mid-January, low mid-July, high week of the mid-May, low of mid-October, and a high August through early October. Of course, that has a pretty big effect on the Australian dollar. It's just been beaten around a bit. The commodities forecast, I won't go into gold that much, but I want to focus on what my forecast was. And I think I did, I'm pretty sure I did last year. This showed that the bonds would be falling for a lot of, in terms of price, going up in interest rates for last year. And then we were looking, this is the one straight off what I did last year. From about September onwards, it should be bottoming and rallying, and interest rates going down until the end of the year. This is what we, in terms of the seasonals for gold, we expect a high end of February, a low early July, and a high early September, and a low mid-December. Well, have a look at the, it looks like I haven't got the bonds up here. This is for 2024. There we go, I skipped through. So what we're seeing here is a bit of a rally in rates, a bit of a rally in the bonds, then a bit of sickness into the mid part of the year, and then a rally in bonds and another fall in interest rates. This would be perfectly normal because it's the biggest election year cycle for the whole world. So there's the most amount of election years the elections going on, except for Albu. Unfortunately, Larry, you can't vote for him this year, but I think you can vote for him next year. And so what the central banks tend to do is they tend to try and keep the incumbent in, particularly if it's a communist socialist type government, and they obviously get some sort of kickback from it. I thought that last week I was thinking, Reserve Bank is not going to lower rates today. They're not going to change anything. But what they're going to try and do is make sure that the most amount of people make the stupidest decisions at the moment based on the idea that interest rates will fall. It's a bit hard with 4.35% interest rates and an inflation around 4.2% for the Reserve Bank to actually pull interest rates down. So we haven't seen the inflation rate fall enough. At the moment, it's just real interest rates are in the zero area. So it makes no sense for our Reserve Bank to do anything with policy. It's not tight. It's not fighting inflation. All it's doing is giving a return to retirees and people with cash in the bank at the rate of inflation. So there's no pickup in real rates of inflation as there was before. Let's move on. Now, in terms of the US stock market, this is the forecast and the disclaimer and warning. Hopefully you're all seeing the chart okay. In my normal roadmap was 2023, a high in mid-July and weaker into Christmas, which didn't happen. What I also do is I look for what happens in a normal year for the index, and I don't think I've got it up here. Okay, there it is. I went too far. If it's a normal year, we'd see a low in early March, high end of May, low in mid-July, high in late August, a drop down into October, and then a rally up into mid-October. So what we saw is a normal year for 2023. Now, my forecast, if you had a look at some of the work that I do, the longer-term cycles, sees for strength into 2026. So I wasn't all that keen on selling it. I was looking for the Christmas rally as per normal. And the Dow Jones Industrial Average is here. Low mid-March, high early May, high early August, low late May, this is a bit out of kilter, low end of May, and then it just took off. So Larry's bullish charts have been really good on showing out what you've seen, so I don't need to really go through that. Now, because the S&P is a an election year, and it tends to do well. We see a high early April, low early March, a low late May, a high end of August, which you'd normally expect, then a crap out into late October. Remember when Trump got elected in 2016 and the market puked, absolutely puked when that happened, because they kind of weren't expecting it. And one of my customers got to buy at the level that I said, buy this at, and he was just in love. I never saw him again after that. He just went, I don't know what he did, but he bought the absolute low. It was off within one tick. And he basically, I don't know whether he made a lot of money or whether he blew it later, but never saw him again. It was interesting. He would have got such good success. He said that he got that. But Trump was such a surprise, and they thought the end of the world was going to happen, and it just took off. So a normal year is the normal mass pressure chart. If it's a normal year in the Dow, we expect a high end of January, low end of May, high early June, a drop down into early September or early October, and then a takeoff. So this is what happens normally, and I think we're just at that high end of January point. If we look at the Australian market, you'll see that the 2nd to the 5th of February is often when the Australian stock market tops. It topped in 1994. I've got a tale around that, but I won't go into that. A couple of lawyers got in my way of selling it, and it was a bit disturbing, but I won't talk about them. But in the end, the year 4 is actually quite a good year. Next year, the year 5 is one of the best for the Dow statistically to be long. And what I'm seeing in my overall business and interest in the market, I'm not seeing a lot of people interested in the stock market. I'm not seeing a lot of people interested in technical analysis. I don't know if anybody else is seeing that same behavior, but there's not the demand. We'll start to see the demand in the year 5, 6, and there'll probably be a 7 year, which they're interested in, but the market will not give them what they want for the year 7. And this is the mass pressure chart for the Dow in 2024, which is a bit different to a normal year. It's kind of still a bit meandering till probably around mid-May, and then it works its way higher into mid-July, low in early September, and then a high in late December. So that looks fairly normal, and I'll be buying the dips for 2024. My problem is one of George Soros's CIO, Chief Investment Officers, has come out and said, BTFD, buy the fork and dip. That's what we've got to do because we're pricing in a win for Trump. Trump, of course, won't win. We know that. He will end up in jail. I can't comment on whether he deserves it or not, but certainly the machines will be against him, as will be the illegal immigrants they're putting in to vote. So it's unlikely that Trump will get in on the numbers. There might be 100 million people voting for him, but probably the votes will be like suddenly they'll pluck out 200 million extra voters in the US, and they'll go, people go, yeah, well, there's 200 million for Biden or Kamala or whoever the clown is to be replaced.
At 2 a.m. in the morning.
Yeah, about 2 a.m. in the morning, there'll be huge numbers of
Anyway,
votes just coming in.
did you hear that Donald Trump's got syphilis?
Oh, I'm sure he did. He screwed that E. Jean Carroll. Did you see the video of her when she was playing the dating game? I'll send that to you. She's absolutely nuts.
Yeah.
It's absolutely nuts. So if he raped her, he wouldn't have gotten a permanent case of syphilis. It would have been syphilis type 27. Okay, so let's talk about the ASX financial forecast and February 6th it is, and here's the normal disclaimer in the morning. Just remember that All Ordinary's likely path last year for 2023 was to start lower and end higher. It's not a pretty forecast the way that it works out. The actual outcome was, we have that somewhere else, but as you can see, it was a pretty good year and it worked pretty well painfully, but it was good if you just held on. The mass pressure chart for 2024 is quite similar, actually. So I'm kind of not that bearish for this, but I will be buying dips. I've set up a little bit short at the moment, and this is the normal year forecast for the All Ords, which is highs to 2nd of February 2024. This is straight off the members forecast that I do. A drop into end of June, and then a continuing rally up into August. Even a funny little peak around October, mid-October, drop down into November, and then a bit of a Christmas rally. So, sorry, yeah, low into early October, rally into early November, and then a low early December, early December, and then a rally up, which is the normal stuff. So for me, interest rates will be positive come second half of the year. Equities will be positive come the second half of the year. At the moment, I'm trying to hold on a little bit, find some bargains. Banks are overdone. Materials index are being beaten up by China. I've had a fantastic run in my uranium stocks and some of the gold stocks. Uranium is kind of, I'm strange about uranium. It was such a good year last year. I don't think it'll be anywhere as good this year. People have been piling into it though. I had one of my uranium stocks turn into, somehow in a couple of weeks, it had doubled and it turned into my biggest holding, even though it was the one I liked the least. So it's a bit random at that. Gold's had a confusing time. The Aussie gold stocks have been falling while the price of Aussie gold has been going up. I think it's 31.20 last time I looked, which isn't quite the old highs. I think it's around 32.80, if I remember correctly. Larry, I don't know if you look at that. I do a bit of a calculation. What do I do? There's the Aussie gold. It's not. This is don't worry about this. This isn't right. This isn't right at all. Where is it? I'll pull it up on a proper chart. Your one was the Perth Mint gold there, Larry, that you were looking at. Is that well traded, or is it?
Gold.
Yeah. Was that well traded?
Oh, I don't think it's super liquid.
And is it an ETF rather than an
It's an
exchange for
ETF.
physical?
Yeah, I just use the ETFs as a proxy.
Yeah.
The asset classes there. The other one is just GOLD.
Yes, I do look at that
And
one.
I think that one's a bit more liquid from memory.
Yeah, it would be, I think, because I don't hear much about it. And there's the GOLD is exchange, is an exchange ETF, is it an exchange for physical?
It's an ETF, yeah.
But you can pull an a lump of gold out of it if you wanted to. Is that right?
I'm not sure.
Okay. Some reason I think that is. There's the Aussie gold, 31.14. And it really is nearing the end of the old tops. So I think this is, where's the probable high? Where was it? 32.19.
Those things on those charts look like Gartley patterns.
They're not, but
the
they
wings
look like
on them.
it. Yeah, they look like it, but they're not.
No.
It's actually just using stop and reverse with shades. See here? That's a stop and reverse. But yeah, the whole all-time high. One thing I love to do is to look at yearly charts and see how it's gone. That's something I do at the start of the year. And look at this. This is Larry's statistical way of doing it is much more refined, but mine is let's look at the chart and see how it's going on the yearly chart. And we can see that basically it hasn't had any hiccups since really 2013. Boom, 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 boom. And so far this year, we haven't made a new yearly chart, new yearly high, but you've got to expect it's going to come. So that 2013, how many years is that? That's basically 11 years. Normally, expect to go between 10 and 13 periods, according to GAN. So we might have another 2 years or so in the Aussie dollar.
Well, Ken should be laughing, but he's not.
Ken's become a bit cagey in his old age.
No, that's the stocks that I'm looking at. It's not the physical gold.
Yeah,
Yeah, I know, Ken.
That's right. The stocks are a little bit more shitty.
You never stop with 300 million in the bank and the damn thing's bumbling and no debt. It's just bumbling along as if it's a dog.
Yeah. What was that one?
Well, Silver Lake is being
Silver Lake, yeah.
Red 5, and there's going to be 6 billion shares of the damn thing now. You know,
Yeah, but the Red 5, I looked at it yesterday and I thought this is pretty stupid what's happened to the Silver Lake, because Red 5 is strong. So you're getting into Red 5 at a much better level. So I didn't understand why they dumped.
Ken, why don't you take a position in the gold ETFs?
I'm not interested. I'm happy positioning myself.
Some of the stocks can be really good when Larry, in answer to that question, the gold investors in Australia are some of the dumbest people on the planet. Okay, and what they do is they sell it off when it's clear that gold's going up, and it'll go further down than they should, and then when it's going up, they'll take it for further than it should when gold's clearly going down. So don't knock it. I think Ken's onto a good thing if you can just do the opposite at extremes. They really are. They really do push it too far. Either way. But what I'm seeing here is Red 5. This hasn't quite made a new yearly high, and it gets good above 41 cents. That's probably the best concept that I can give you. But when we look at the volume from last year, 2023, big pickup, inside bar, confusion. Let's drop down into the monthlies. And we can see the monthlies picking up, and it's probably getting up to 62 cents, in my opinion, and stop below 25 cents. It's up on the monthlies. So when I was a fund manager, the thing I learned from the guys who trained me on stocks was if there's a takeover, you buy the takeover target and you sell the acquirer, the aggressor. And so it's a merger. So there's a little bit of a difference, but this is operating in opposites world like we're seeing in most of the things around in our recent times. Reds are going up. Silver Lake got smacked 20%, and red just kept on walking. You know, red didn't get really beaten up. So
Red's got 16 years worth of resources, but it's got debt, while Silver Lake's got 6 years worth of resources
and cash.
And it's cash, heaps of it. So it's a real funny mix.
But it's a good combination.
Oh yeah, but
yeah. So here we've seen it drop down to where I consider it would be a bit of a buy, around about 32 cents, with a stop under 31 cents on the dailies. So that strength yesterday really threw me, and I thought, red is reasonably strong. Silver Lake got smacked, so I bought a bit of Silver Lake. I'll get into red. I did want to get some Silver Lake at $1. I don't think I was going to get that at all. I didn't think I was going to get that at all. So I was buying a bit yesterday, and I'm happy to buy down to like $1.06 or even $1. I think it'll be kind of supported as long as Red can get the funding. It will be Red be doing a cap raise for that. You know, Silver Mines just had the big smack. It had a rally up and then they sold stuff 20% cheaper. That was just brutal to the shareholders. I don't know if you had any Silver Mines there, Kendo, but
they're doing a capital raise, mate, knocked it down to 13.5 cents, I think.
yeah, exactly. And
it's got a lot of environmental issues, even though it's state significant. So it's going to be real shit finance, which one the Pitt Street farmers, the locals.
Yeah. So for me,
what are you on your numbers?
Sorry, Ken, I'm hearing like a feedbacky thing. What we're saying? Or if you can.
You got Ramelis, RMS.
RMS, yeah, I can do that.
RMS.
Let's see if it's it's Hermes. Did you know that? I didn't know it was Hermes. Now it's boom. That's had it's down into a bit of support. Look at the doji there. It's close to where I would like to buy it. Close above $1.50. I'd be happy to. At the moment, just the longer term trend is up there, so it's still holding in there. And the doji would give me a reason to buy on the break up and break back through this lower point here. So yeah, my concept on these goldies is they really do bad things at the right time for themselves. The average gold investor. This is a gold road, which has also been, that's not coming up for me. The gold road is has been having its neck cut every so often. I'm not sure why. Ken, you got any ideas? Still looks like it's tragic.
Well, lower production figures was one reason.
Yeah.
Yeah, America, they're not. Yeah, they've been spending their money on strategic. I think they've got De Grey 20%, a few other. So they're sitting on some nice little resources, but they're just fixed on 150,000 ounces a year and making cash from goldfields. You know, it's the joint venture partners. So they're not doing any big, not like Ramelius took over Breaker and then it audaciously took over Musgrave, or almost one on top of the other. So it's where it had no long-term resources, it's now got something like 30 years worth of resources and exceptionally good ones too. So
right.
I mean, while we're talking of gold shares, David, a classic example of what makes gold shares difficult to trade would be Evolution. Evolution have a 60 million capital raise at $3.80. On the day the issue closed, they were holding the thing up at about $3.76 or something.
Yeah, and then they belted it.
That was on the Friday, and then on the Monday morning they bring out this terrible production report. The thing's crashed to about $3.10. Like the production report comes out the exact day after the issue.
Yeah,
I mean, I'd be interested to know what how much they actually did raise in that issue.
Right.
Evolution's an interesting one, along with Northern Star. They both went into North America, in Canada or Alaska, and spent $1 billion buying up leases, which haven't really, and spent a bucket load of money to try and turn them around, and they haven't really got anywhere. Silver Lake did the same, but it took over a company in administration for about 140 million, and I think it's spending a couple of hundred. So, like it's.
So what they've done is they've exchanged low-cost Australian labour into and put it for US dollar high cost, and their revenues are US dollar effectively. So they've actually screwed their margins. From what you're saying there, okay. Okay, that's
It's,
interesting.
the other thing with evolution is I remember Jake, whatever his name is, the CEO, when they went into the mine out at Orange, you know, and he said, we bet the company on it. And I'm thinking, you bet the company? And he says, oh, we've turned out to be right. And I'm thinking, yes, but you bet the company. I don't like those alpha gamblers who sort
Yeah.
of, you know, scares the daylights out. I mean, I think that's reflected possibly in the price of the damn thing too.
Yeah,
so-
exactly. Okay, that's it for me. Thank you all, and congratulations to Mark Brownlow, life member.
Got any more questions for David?
Thank you, David.
Thank you very
Thanks,
much.
David.
Okay.
Always good starting the year.
Thank you.
Thank you, David. Now, open the floor to the next person wanting to share their ideas.
Thank you.
Sorry, everyone, I forgot to share my screen.
Perfect.
So anyway, you were looking at the All Ordinaries Index. I'll get rid of this screen. We're looking at the All Ordinaries Index here, and
Can you send me the link?
yeah,
Yeah.
and the All Ordinaries did not make a new high, but when I switch over to the 200, we can see just made a new high and now retreating. And how far back can it retreat and still maintain its upward momentum? Or do we pay any specific, is there any specific implication of not sustaining the high? So if we do drop, say, through that moving average line around about 7,200, just the thought there that perhaps we're sitting on a knife edge here on the Australian market at least.
Yeah, well, I'm not bullish because I just think it's hasn't gone through that 7,600 and creating a lot of work. It's just
We've had
bumping away, you know, just breaks it and falls back.
We've had a nice 5-wave sequence here, and new highs and then it comes back. So I think the immediate outlook is to test that support.
Right. So interesting with silver is it's actually gone up. What's recovered? What's that, about 50%? Anyway. Bear with me, bear with me.
Try this one first. Yeah, the main feature there is you had a good little rise off the low, and from that late to 2020 peak, we've had nothing but congestion. At this stage, you know, eventually would sort of favour this on the bullish side, but in the medium to short term, how much ranging or potentially a drop back towards the low is there a risk of that happening?
Correct.
Because we've had
About a 50% retracement from.
Yeah, we've hit the 50% there.
So let's come back, what, 50%?
Yeah, we've had only
60%.
a 3-wave drop to here, which makes it look positive for a result for another move up. But this rally here looked very corrected, so we may be sort of moving to maybe this is more some sort of X wave, and then we'll have another drop down. So, you know, what's the likelihood that that silver now gets stuck in this range of this high and around about this low?
Look, when I'm looking at penny dreadfuls with some sort of fundamental, something behind them, I like to see a chart like that where it's got a long base, comes up, pulls back 50% or so, and then goes sideways for a long period of time. Not always. Sometimes it fails and goes back down again, but I just sort of wonder whether it's a lot of accumulation happening in that sort of space.
Oh, definitely accumulation, but
Of
is
phys-
it
of
sufficient?
Of physical, yeah.
Yeah,
No.
is there sufficient evidence there to favour the upside from here, or does that have to be
Well,
delayed?
there's no evidence. It's going sideways. We don't know until it breaks out.
It's ranging until it breaks out,
Yeah.
And you know, like they're in an election year, they're not going to let gold and silver take off and trash the US dollar and make Biden look stupid.
Any volume available on that chart?
I don't know.
For Larry?
If I get rid of this thing here.
Just
these
click
are
on the chart.
Yeah, the trash can.
Yeah.
That's it.
So if we just go to, how do I refresh this screen?
What do you want?
Oh, just to get a better scale.
Or just double click on the axes.
Actually, on the
Double
axis.
click on the axis over to the Y axis and X axis. Double click on the other, down the bottom, date axis.
No.
Okay, so there's our highs, post low high, reef high there.
And 26 is the range. We're getting higher lows. You're getting lower high now. Yeah, so.
It doesn't look interesting at all.
At this stage, nothing interesting to get you caught into it.
Well, here's one to look at.
We just have to wait and
Here's one to look at. Aussie dollar,
Yep.
Japanese yen.
Is that AUD JPY?
AUD/JPY. The Aussie dollar is actually doing good against some other currency. Yeah, try monthly. Oh, look at that. A trend. Upside.
No, wrong. No. That's it. Yeah. You want to shrink it down the side and straight up and down.
It's looking even better.
That looks good. It's a nice range.
Here's a chart probably very few people are looking at. How do I get?
That's a nice little uptrend from 2020.
We'll see, like, what's the interest rates? The interest rate differential is probably the major driver.
As it would be with most FX.
But even more so with Japan, they're because their interest rates what at 0.1 or something.
Yeah.
So there we go.
Bring up F&G.
Just is there anything there? We've sort of got this line of resistance here, which is held through here in the mid-teens. We've now come back to it, failed to drop away for the first time and easing through it. Is there something there to be focusing on, Larry?
Yeah, too much resistance overhead for this now. Really. I wouldn't be buying here, that's for sure. But it has been a nice rally, off those that low. if you go back, the interesting thing is if you go back to 2009, look how quickly it sold off from 108 down to 50 something in 2009.
Yeah, but are we on the verge, one of these knife edge moments that things that have
I
dominated
wouldn't
the
say with
market
this.
for 20 odd years change?
It's definitely not knife edge.
Like that? Held the resistance, failed to make a new low, not respecting resistance at the moment.
Go to BOND. It's the Aussie bond ETF on a monthly chart.
BOND.
Yep.
That one? BIMK?
No, Australian bond. BOND. It's one of the spot. There it is. Spider. Australian bond. Just down two. Down one more and one more. Just up a bit. Up.
Bloomberg. United States.
No, just go up. You've gone past it. Further up.
Oh, I mean, after.
It's right, it's scrolling there somewhere.
BOND, S&P ASX Australian bond.
Yeah, in there.
Oh, there it
That's
is.
it.
Well, there's a base for you.
Yep.
Still forming.
Yeah, it's ranging.
Yep. After that big downtrending effort.
Yep. The ranging effort, yeah.
That high in the middle of that range is pretty much around that support back a few years ago in 2018. Big area if it breaks up through there. Tested the lows there in that range about, what, 4 or 5 times.
Yeah.
Oh, here's an interesting one for you. CSL. CSL has been the darling stock for like about 40, 50 years.
30 years, yeah.
And look at what it's done in the last few years.
It's, is its period over?
It's looking a bit shaky.
Double top, you think?
No, but it's...
No, that's US, John. That's the wrong one. That's US.
Oh, yeah. Do I need to do an AU dot?
No, you'll just find it in there. Just do CSL again.
All right, so just got to pick from the options.
And just scroll down. You can go to, yeah, that's it. Now scroll out. Look at this, man.
Yeah.
Oh,
It's struggling, isn't it?
no.
Wow.
Want to buy again?
That's distribution, you think, Larry?
Oh, I don't know. No, I don't know. This is the darling stock, you know.
Promotion.
Like
There you go.
everyone's father or grandfather who held this when they passed it on to the family said
Isn't that beautiful?
the stock.
$2.50, I think it listed, didn't it, or something like that?
Isn't that beautiful?
Say it again, Ken.
What did it list at? $2.50 or?
Oh, mate, it was less than that, I think. Dollar something.
Yeah.
But isn't that beautiful? We had a nice spike high there in the late 2018.
Yeah.
Market oscillated around, and when it came back up, made the high, and all we got was really congested action to go no lower than that 2089.
And was that around COVID time? Yeah, when COVID hit. And did they win one of the contracts for the vaccine in Australia? They're going sideways.
Run out of power.
We can shoot out in line now if you.
They thought they would be.
Thank you, Larry.
Might be host.
Hello?
Can you hear us now?
There it
Yes,
is.
yes,
Right,
thank you.
Yeah, interesting one on
Yes,
Fortescue I came
right.
up against the other day. You know, I'm just sort of playing around with you know, SPY, etc., and just and you know, like each one of those moves, you just do a simple trend line, and if you want to use the RSI, but you know, you're looking at a 7 to 9% move with each one of those cycles. So people who want to trade, you know, that's just a 15-minute chart. Yeah, it's
Yeah,
yeah, it's I haven't traded it, but I thought, well, it's an interesting, you know, or options. Yeah, yeah. So there you go. That's about all. What else do you want to look at, guys?
Well, put up CSL again.
CSL.
Yep. Put no in the yeah, where you were before. Just go press back arrow. So you go back to that chart. All right, go. That's it. Click expand.
Yeah.
In the left-hand side of the top corner of the chart, put in CSL. No, just across a bit. Yeah.
The US, change that to CSL.
No, just across to the right a little bit.
That's it.
Yeah.
See where it says AUD
No,
USD?
Hang on. We've got two people talking in my ear. So.
Yeah.
Where it says AUD USD, just
Oh,
put in
right, sorry.
CSL.
Hold on. Yeah. That's it. And
Yep. So bring it up.
That's it.
Just go to monthly now.
monthly.
Now expand it all the way out. All right, so look at all this on the right-hand side, this really volatile stuff, okay? And all that beautiful uptrending activity for the rest of the life of the chart. Now just go back, that's it. Yep. Now go down to the bottom right-hand side, click on log down the bottom. Click on log.
Yeah.
Left, one left. That's it.
Now look at that. Doesn't it put that, that what's happening currently into perspective when you look at 2008 to 2011?
So you got wave 1, wave 2, wave 3,
Look at that.
wave 4. Now
Look at what the log scale does.
Mm.
Puts the current price action into perspective. This thing is going to $3,000 in 10 years' time.
So in other words, it's had that.
It could.
Yeah, it's had that cycle around what's that, 2007. Yeah. Had this cycle. Yeah.
That period from 2008 to 2011, 2012 is just so much like what's happening at the moment. You know,
this area here.
Yeah.
Yeah, and the same here, yeah.
Yeah.
Yep, yeah, I'd agree with
But
that.
if you take it off log scale, it just disappears.
Interesting. Yeah.
Look at that.
Yeah.
So $3,000 in 10, 12 years' time.
Yep. Well, that just goes to show where the world's going, hyperinflation.
Yeah.
Weimar.
Yeah.
Any other stocks?
And also biomedical stuff.
CBA.
You put up BHP, because it goes to sell about 5 on Commonwealth Bank, isn't it?
Yes.
That's breaking out again.
Well,
Yeah.
Well, it's got a combination of that Aussie or Lords deal, but you know, it's done a little better because it drifted across its previous high, held above it, and now moving above the recent consolidation.
So it is an election year. Nobody wants a recession, you know.
So that's working rather well, but the only difference here is if you look at the wave structure from the low, the 2019 low or the COVID low, there's a case there that there is some sort of fifth wave. Maybe that fifth wave is moving now into a diagonal triangle where we just finished the third wave. So we sort of have another drift back down, not terribly high, and then another minor push higher as this market keeps pushing up.
So it comes back to find support.
I know he's on that to, yeah, that's, no, but if you then go and have a look at Macquarie Group,
What's the
stay
code?
on the backs, MQG.
MQG.
Yeah, you'll see that it quite hasn't followed through in the same way that the all. But then if you look at one of the
Now,
other,
hey, Ken, go down and click log scale for this one.
yeah, there you go.
Expand it out. So sorry, no, make it crunch it up. Yeah. So what's happening at the moment is really not terribly significant to the rest of the data on the chart.
Yeah, but if you now call up one of the other banks like ANZ, National, you'll get quite a different chart to these two. Nowhere near the same upside.
Yeah.
I think it's even worse.
Yeah.
So it's only Commonwealth Bank that's breaking to the upside and everything else is failing.
Then if you go to the minor banks
Yeah.
like Bendigo or Bank of Queensland,
What's the code, mate?
BEN,
BOQ.
Then
Oh, Bendigo, yeah.
Bendigo and Adelaide. The sort of variant of that national bank.
Yeah. BOQ, Bank of Queensland.
BOQ.
Q. Yep, same pattern, isn't it?
Except this one is, you know, in this swing down has gone faster.
It's a regional. Weren't they trying to do a merge with somebody? Bank of Queensland?
Suncorp. Bank, yeah, Bank
Suncorp, yep.
Suncorp. But
Yeah, that was blocked, wasn't it?
Suncorp's got insurance as well.
Yeah.
So you at one level, it was nice to see that lift from the COVID low, but particularly with this Bank of Queensland, the subsequent drop has been quite deep.
So has it hit support, or is it actually,
Yeah,
or is it bouncing back up onto resistance now?
You know, and the COVID pushed it down, but it's rebounded well after that. But we've barely gone through the first swing high, and it's
Well,
ready.
COVID pushed it down, but it did a lower low, hasn't it?
Yeah, but that post-COVID low, post-COVID high, is here we go. Just there is it it hardly even got above the first swing high on the way down.
$18.
Yeah, you know, so
You wouldn't want to be holding Bank of Queensland.
at one level, you know, you're thinking on this swing down here from our 2007 high, you know, have we finished a long-term consolidation here and ready to move higher? But this very deep drop makes you think twice about the failure even to get above that swing high back up there before the final drop into the cave below. Yeah, it sort of.
So that's support or is that resistance? That's,
it makes you really very cautious about that, and you're seeing very similar sort of thing in the NAB and the ANZ, although not as weak here as a Bank of Queensland. And all of this is happening when Macquarie and CBA are pushing up at those highs, and CBA continuing on to new highs now.
But Macquarie wasn't pushing to new highs, was it?
It did on the first swing up, but not on the second.
Yeah. So what's
the
CBA got?
CBA and the Macquarie made new highs here, but through here CBA is making new highs, but the Macquarie isn't. So it's a really interesting divergence in our banking industry here.
So where's the loan book in each of these? Is it so regional banks in the US are getting hammered because they've got large exposure to commercial real estate, and commercial real estate, there's been some noticeable big sales which have gone through at 50 to 60% off the previous highs. So if you got commercial and you're a regional bank in the States, you're going to get hammered. If you're a big bank, they're not into commercial real estate. So are we looking at a similar thing here? Are we looking at first homeowners getting hammered?
Or are we seeing early signs of a crack in the financial system as well? That we're getting these divergent.
I remember those regional banks in America, the ones that fell, what was it last year, the Silicon Bank.
Oh, there's been
that was because of the bonds. And now the worry, as you say, Ken, is the commercials.
And there's one big bank apparently that's just gone down recently. Or was in a
I forget the name of it, the New York Community Bank, I think that was.
Yeah.
It's just happened.
I've never looked at their shares.
But see, the National got above that swing high, which Bank of Queensland did, and it's avoided the slide that the Bank of Queensland done. So, you know, can we, you know, how optimistic can we be at this point?
When you've got all these buy and hold people in the banks, and people have bought in it. Let's say
$1.60.
Oh no, you know, since 2007, so they bought it at $28 or something.
Just going
So
sideways.
it's gone nowhere, you know.
So they're picking up dividends.
When I know someone who's quite wealthy, he said I couldn't care what the price shares do, as long as I get my dividends. That's all I'm interested in. So when I die, my family can look after selling the shares.
Put up LTR, Ken.
There's a gap there. So
sorry, Larry.
LTR
LTR, says Larry.
on a monthly chart.
Yeah.
Oh,
Look.
On monthly.
Click
Yeah,
one in.
yeah, I know.
Oh, you got the log scale on. That's lucky. Take the log scale off.
That one.
Boom.
Well,
Now put the log scale back on.
well, she stopped buying and the price dropped, didn't it? Well,
Log scale back on.
They run.
Put the log scale back on. I think there's a head and shoulders pattern there, isn't there? Down the bottom. Inverse head and shoulders. On the log scale.
Yeah, chart.
Just to expand it out.
Yeah, it's like trading a spy, isn't it? Right.
Yeah.
So the question is the rally up from those 2015 lows?
So you're looking at this
End.
second shoulder now, are we, Larry, over here?
No. Previously, if you go back to 2013 to 2018,
Oh, right, our inverse. head and
18.
shoulders, yeah.
Inverse head and shoulders.
And same here, there's head and shoulders. There's another one.
And it could be forming a head and shoulders pattern here. Possibility.
That's right, just a bit
Yeah.
more time. CHN. You'll love this one, guys. Similar sort of chalice.
Oh,
all those people that bailed in, you know, at 6, 7, 8, 9, 10, 11 bucks. They did $100 and something million capital raise. And look at that.
Wow. So where'd you get out,
And
Ken?
is someone going to jail here?
Where did you get out, Ken?
No, they just didn't quite understand the topography of the So look, it'll be a good buy. I think it's going down to about 50, 60 cents is my goal. I think it might be a buy at that.
China.
You go to WA, you know, PGEs, you know, it's I know people who got in at 20 cents and rode it all the way up, took the capital raise, and they're riding it all the way back down again. What's the long chart look like?
And the moves are horrendous, really, haven't they? On some of these things.
So what's that? 46 cents, 50 cents. That's around where I think it's going.
88 cents now, it's another 50% drop from current values.
I have lunch with a bunch of guys and they were poo-pooing me for months. I'm saying it's going down. So it's going down.
So it'll be worth a buy under 60 cents.
Well, we've got PGEs in WA and they've got very good finds. It's just the idiot management, you know, or maybe they were very smart. Maybe everyone ran it.
Got out.
Everyone ran it. They did a capital raise, well over $100 million raised. They're sitting back. They can live to their retirement age. This is their super, their long service. You know, they can. You know, I'm cynical, but you know, like when you're talking about resource stocks. That's 45, 50 cents, I think, is where it's going.
Yeah, looking.
Could even be down to 20.
I'd be looking for that 2009 high to contain the drop. Yeah, at the first hit.
Yeah. And if it didn't, then I'd be looking for. It's one day. You know, I have a theory that gaps always get filled in these resource stocks. It just happens so often.
You just got to live long enough.
No. Look, I've had some spectacular rises and I thought, well, these little buggers are sitting on something nice. I'll just hold on to them. And sure enough, they fill the gaps.
It'll get filled on the downside.
Yeah, that's right. That's the gap.
Then you got to work out where to buy it.
Over the long term, it will go from its high back towards its low.
Yeah, well, that's right. But the thing is with resource stocks is they cycle through those highs to their lows really quickly. When something's been dead flat for you.
But the gap theory, you do have a gap theory which says there's breakaway gaps, runaway gaps, and exhaustion gaps.
Yep.
Right?
So so you get your breakaway gap, your runaway
breakaway
gap.
gap's not going to be filled until this trend is over. The runaway gap will probably not be filled until this trend is over.
Yeah,
and it's only the exhaustion gap that you know, in a reasonable trading time frame will be filled.
Yes. So that's the runaway gap. Well, is that the runaway gap? You know, like.
Hey, here's one for you, Ken. LVMH. VMH. It's Louis Vuitton, Moet Hennessy.
Hang on, Louis,
LVMH. There it is. Down there. Just scroll down.
The Paris one? Yeah.
Any, I think. Just scroll out. Go to a monthly chart. It just shows that the elites aren't doing it tough, mate. They're all in Davos and they're all making money and doing well.
Oh, you don't buy that conspiracy theory about elites, do you, Larry?
Well, mate, all I have to do is look at a chart of all the luxury goods that are being sold. Look at that.